Well, hello there. Inflation and rents are coming in hot. That's what the word on the street is, actually. So, hey, it's Mike Rains with Remax Terrasol. Welcome to the Mike Rains Real Estate Channel, where we try to bring you as much valuable information to be able to make great decisions as owners, as renters, as buyers in today's market. And so, yesterday, the numbers came out for the inflation. The CPI printed at 8.3%, which is very much hot. It's higher than even the market expected, which I don't see why you and I don't have to look very far except for at the grocery store and other places where you spend your everyday money. And this one included rents, which that's the next number that just came out today. That's up 6.1% year over year. Both those numbers are year over year. And so if you're renting, you've noticed that your rent's increasing, and the owners are allowed to keep raising those rents. And here in the Orange County area, state of California, you're allowed to do that from the inflation number plus a margin capped out at 10%. So for those that are renting, your rents have been steadily going up over the last like 8 to 10 years. And that's looking like it's going to continue to do that. So when you combine all this stuff with the mortgage rates that have been on the rise as well, it's all but certain that the Fed's going to raise at least 3/4 of a point of their overnight rate later on this month. So that's going to put more pressure on short-term interest rates like your credit cards, your car loans. When you go to get a new car loan, those are how that rate's affecting that, is that those are going to be higher. So if you can imagine that. On the good side, maybe you can get some CDs and stuff like that to be able to pay you a little bit more, but the banks aren't exactly passing that stuff along. But for sure, your short-term type things are going to cost a little bit more. And what happens is that, yesterday, the market took a huge tumble, and normally that's good for bonds. When you see a big dip like that, bond rates usually respond and the yields go down, and that's where you get lower mortgage rates. But what's happening is that the bonds are being sold off as well. And so you end up with these higher yields. And that's exactly what the Fed is looking for. They're looking for this demand destruction in the marketplace so they can make the consumer like you and me feel less wealthy, less confident in the market. So you're going to spend less. And that in itself is supposed to bring down the inflation. And that's their targeted goal, having a balanced pricing. But more importantly, inflation has a greater damage to the marketplace than anything else. So it's eroding your buying power. So if you're really thinking about like, well, what does this mean to me in regards to real estate? Well, I'd say if you're currently renting, your rates are rising on your rent. And so buyers that have been holding off on that are also going to be in the rental market. So people that are renting, you're going to have more people joining you, because as the rates rise and some buyers are not able to absorb that, they're going to either, if they're living with friends or mom and dad or something like that, they're going to go, and they're not going to do that forever. They're going to go into the rental market. So you're going to have a lot more competition there. And unfortunately, the inventory on rentals isn't very high, because that's another dynamic. However, the builders are starting to build more. I think it was like 400,000 units this year, which is the most that they've ever done, but it's still not enough across the United States. Apartment buildings are being built, but that's still not going to satisfy the demand for that. So you're going to have competition in rentals. I just launched one myself, and we have 18 people looking at it over the next 5 days. And we're going to be able to select some to start for October 1st with multiple applications. And there's a very good chance that the rent that we're asking might actually go up. So what's happening in the Orange County market right now that you need to know about? Well, first of all, every year has a general cycle that goes to it. It starts off at the beginning of the year. Everybody that wants to sell starts putting their house on the market. So you see a rise in inventory naturally. And then right around the middle part of the year, somewhere between August and September, it usually peaks. And then it begins this decline towards the end of the year as people have already moved, kids are back in school, things like that. That's a normal cycle. So now added to that, we have some other dynamics that I'll talk about here in a minute. So the other thing that's happening is that your expected market time for selling a house has dropped slightly to 54 days, and it's bounced around, but that's starting to fall as well because you have less number of demands, escrows happening, and you also have lower inventory levels for buyers that are buying. So what's happening is that those buyers are snapping those properties up a little bit quicker. Giving you perspective, beginning of the year, things were selling in a weekend. Things were selling in probably 12 days was the average to 17, depending on the price point on that. And here's the other thing is that's happening with inventory is that there are sellers that have pulled their homes off the market. So here's to give you a perspective. So not 2 months ago, inventory was in the 4,000s. So 4,100 was the number of total homes available in Orange County, which was still low in comparison to past years. In the pre-pandemic time, we were like 6,500 homes. So to have 4,100 homes was great because buyers had a little bit more choice. Right now it's 3,765 and dropping. But here's another dynamic. Since July 1st, 2,150 homes were pulled off the market or on hold currently. And so a majority of those were withdrawn from the market. They just didn't want to sell at that. Or here's another factor is that some of the sellers are like, hey, I have this really low interest rate. I'm not exactly all that happy about signing up for a 5.75% mortgage rate when I currently have a 3% rate. So there has to be a compelling reason why they're going to make that move. If they need to make the move or an heir is selling the property, there's homes that are always going to be sold for various reasons. People inherit property, they don't want to rent out. People have a job change. There's a number of factors in that. So that's what's happening, and that's been a factor in the inventory. So both the normal cycle as well as people just pulling their homes off the market in that. So right now we have this environment where inventory is dropping, demand is dropping, mortgage rates are rising. And so in the end of this, what your question should be is like, what does this mean for me in the housing market in Orange County? Is the market going to crash? Am I a buyer? Am I stupid if I'm going to buy a home right now? Well, there's a lot of factors that goes into that. And as I mentioned, one of them, if you're a buyer and you're thinking about it, you're like, hey, I'm renting and I'm paying $3,500 a month for this. Surely I can afford to buy a house on that. And that's absolutely something you should explore, because the fact is that rents are rising on that. So the other thing that we need to know is that we're actually more in a balanced market now. So it's not a seller's market, like a red hot seller's market like it was, and it's not a buyer's market. It's more of a balanced market. Right now with the home selling in between 50 and 60 days, just to help you understand what's normally considered a buyer's market, it would have to be above 120 days to sell for it to be considered a buyer's market. That means that the buyers are in control. There's lots of inventory. They're able to pick and choose and negotiate and stuff like that. So it's taking homes longer to sell. In an environment like that, you have a buyer that's more in control. When it gets red hot and it drops below 90 days, that's when it becomes more of a balanced market, somewhere between 90 and 120 days. That's a balanced market. And when you get below that, where we're at right now, it's a slight seller's market, but in reality, there's not enough inventory. Buyers are also wanting to buy some stuff. So it's a little bit more of a balanced market than especially what it was. So now if you're a seller though, you just need to be patient. I've had sellers be like, hey, my home's been on the market for 10 days. How come it hasn't sold? They just have the wrong expectations of what should be happening in this market. So if you're an agent listening to this, you just need to coach your client up and give them stats like this to be able to help them understand, here's what it takes in this market. Here's what the stats are telling us. Here's what's happening to pricing. Here's what's happening to the inventory. And so, hey, that's what you need to know as a seller. You need to know that just need to be patient. You'll find the right buyer that's motivated to buy your home. There's definitely some things that you can do to make sure it looks fantastic to get a buyer to pull the trigger. So it has to look good. You want to paint, you want to do some carpet replacement, whatever you need to do to make that thing look tight. Also, I would recommend getting a pre-inspection prior to listing and get those things fixed so that a buyer that walks in sees how nice the home is, that everything's in working order, that they're not going to have to try to overly negotiate. And what's going to happen is that you're going to get more than one buyer interested, and that stops all price drops right there. As soon as you get 2 people or more interested, you'll actually be able to sell that home faster and for more of a top dollar, even if it's lower than what it would have been back in like January, February. If you're a buyer, you have to know that the rents are on the rise, and so are mortgage rates. So you should take advantage of getting into a mortgage rate that you can handle now. And in the future, I'm talking to mortgage guys all the time, and they feel that we're definitely been on the rise. And as things start to peak out, as inflation turns and starts heading back the right way, that the Fed will make some pivot at some time in the future, and they'll start reducing their rate, which will bring more money back into the markets and stuff like that. Consumer confidence will get better. They're anticipating we will see days when the interest rates will be back into the 4s. And then, hey, that's when you can refinance, and most mortgage companies will be able to do that refinance at no cost to you. And if you don't know somebody like that, I certainly do, that will be happy to refinance you and do it for no cost to get that rate lower. Your payment drops down. Take advantage of today's markets, buyers. So couple things that are happening now that didn't happen before for you. If you're a buyer and you got smoked before because of multiple offers, and you were having to waive appraisal contingencies and loan contingencies, and don't ask for termite, and don't you dare ask for anything to get repaired, well, that's all changed. So now contracts are written. You're going to get 17 days to be able to inspect that property, and you're going to ask for some repairs that aren't satisfactory to you, and that's a negotiating point. And you'll be able to keep the appraisal contingency intact and the loan contingency intact in case it doesn't appraise. So that was a big risk before. But now as a buyer, you're able to keep those things in, and that's other negotiable points if the appraisal comes in short. So sellers, be patient. Buyers, call me, take advantage of what's happening in the marketplace. So when we hit the spring market next year, and you think that that's a good time to jump back in, well, you're not going to be alone, and you're going to have more competition at that time. Heading into the end of the year is always a great time for a buyer to try to find, number one, a motivated seller that has to make a move, whether it's a job change or whatever, and you can negotiate a great deal for you. Take advantage of being able to have those inspections. And if you're a seller, just be patient. We'll get the right buyer for you, and your agent will. I'm always assuming you're going to pick me. So anyway, I hope that helps you guys out. If you have any other questions, reach out to me. I'd be happy to try to discuss any of your situations with you, and happy buying and selling. Thank you for tuning in. Make sure to like this video and subscribe to the channel. Take care.